In this video, I'm going to talk about what price levels you should avoid trading into. So let's get into it. Hi, this is Andrew Mitchem here, the Forex Trading Coach. Welcome along. Today is Friday the 9th of August. And that's right, I'm going to be talking about what price levels you should actually avoid trading into. And I'm going to be talking about support and resistance levels, but so many people talk about support and resistance. And really, when it comes to looking at that on a live chart, what on earth do people mean? You know, there's so many different variables of what you could mean by the term support and resistance. So I like to make things an absolute. And I do look at support and resistance levels. I look at pivot points, I look at candle swing highs, swing lows, etc. All of that's really important. But the thing I want to concentrate talking about on this video and really share with you, because it's such valuable information, is talking about the importance of not trading into round numbers. Now, a round number is something that I call a number that ends in a 00 or a 50. Go and have a look on your charts, and you will see that time and time again, that every time that the price goes up to a certain level and stalls or bounces, it usually bounces at a round number. So let's say, for instance, the New Zealand dollar would bounce at 80,000, or it may come down to 79,000, or it might then bounce at 80.50. So always look for those 50s and those zeros on whatever currency pair you're looking at, whatever time frame. So when at the beginning I'm calling this video what you should avoid trading into, what you don't want to be doing, it's, let's say, take a buy position on the New Zealand dollar at 79.95, let's say. You're buying right into that round number, that huge resistance level caused by that round number. The opposite, if you were selling, let's say that the New Zealand dollar against the US was 80.10 or 80.05, somewhere around about that, you wouldn't want to be selling, trading into that round number. So that's what I mean by levels that you should avoid buying or selling into. Keep that out of your trading, and it will dramatically increase the likelihood of your trades from working. And the same thing when you're looking at profit targets. Don't take a profit target, let's say buying at 79.10 and taking a profit target at 80.05 or 80.10. That's just crazy. What you want to be doing is getting out of the trade before that psychological round number of the 80. So get out of the trade at 79.90 or 79.95, somewhere around that, if you are buying and looking for a profit target. Again, go back and look at the charts. Just go over and over charts. Look at those levels. Draw them on as horizontal lines. That's why I love them, because they're horizontal lines that anybody can draw on the charts. It's not subjective like other things may be, like indicators or even trend lines. Horizontal lines are horizontal line. What you see is the same as what I see. So use those within your trading. On the charts this week, we've seen some weakness in the US dollar, and we've seen some strength in the British pound and the Japanese yen. Today being Friday, the Japanese yen looks like it's retracing slightly, so some weakness coming there. But overall, for the majority of this week, there's been strength in the yen. The other thing I want to talk about is a live webinar I held for my clients yesterday. Had a great webinar. We took 3 trades live, and we concentrated mostly on talking about exhaustion patterns. So that's something that I may talk about on the video here, the weekly video here, this time next week, because again, it's another thing you can add to your trading arsenal to give yourself high probability trades. And lastly, feedback from my free webinars. It's just been absolutely outstanding. Really pleased with the feedback. People are gaining huge amounts of valuable information. I look at trading slightly differently to a lot of people. I don't use a lot of indicators. I don't use trading stops. I don't worry about how many pips I'm making. So quite a different way of thinking about trading to what most people would like to sort of lead you to believe is the right way. If you haven't been on one of those webinars yet, make sure you do sign up for them. They're held twice a week for the absolute beginner ones, and twice a week for the people who have been frustrated with their trading and not really getting anywhere after being trading for a while. So all up, 4 webinar times to choose from each week. They're free to join. You can find them on my website. That's it for now. Have yourself a great weekend. Look forward to talking to you this time next week. I'm Andrew Mitchem from the Forex Trading Coach. Bye for now.